What's up, guys? It's Mike here, and a quick market update for today, which is just after Memorial Day, and really a weekend where we are just so thankful for those that have given so much for our great country and the freedoms that we have. So it is May 26th in 2026, and really this market just keeps changing week by week. And we had a little bit of relief earlier this year where rates dipped under 6% briefly. In fact, we got some folks around 5.5 to 5.625 on a 30-year fixed. Buyers started coming back in the market, but the last couple of weeks, rates moved higher. Again, pretty aggressively in the last week or two, is because we're looking at bonds climbing and inflation concerns had picked back up. And that's really the story right now. So the housing market isn't dead. Buyers didn't disappear. Affordability is still, of course, the biggest issue that we have, really not just here in California, but in the entire country. And inventory, yes, has improved in some areas, but monthly payments are still the thing stopping people from moving forward. So what's interesting is we're starting to see more opportunity to really just simply show up. Homes are sitting longer, sellers are back in the market. It is the spring market, so yes, more inventory. And now we're seeing rate buy downs come again. Builders are negotiating, and buyers who are actually active right now are finding way less competition that they did during the insanity of 2022 and 2021, and even parts of last year. And that's the part that social media doesn't talk about enough, in my opinion. Everybody keeps waiting for this dramatic crash or magical environment, but most people still buy homes because of life, marriage, kids, divorce, relocation, better schools, more space, investment opportunities. So life doesn't wait for perfect rates. And honestly, some buyers right now are negotiating better deals because they could have gotten when rates were lower because they're actually able to leverage again, buyers are negotiating better deals that they couldn't have gotten when rates were lower, but now they have leverage again. So now nationally, pending home sales have actually increased for 3 straight months, even with rates still elevated. That tells me buyers are adapting. They may not love the payment, but they're adjusting expectations, looking at different strategies, negotiating credits, or planning to refinance later if rates improve. In fact, I just had a client and we worked through numbers and we talked about, hey, this is where things are now. If things were to dip to where they were in February, things calm down overseas, what we're seeing with the global conflict, oil, inflation concerns, this is where things would or could possibly be as we just were there. And remember, refinance cycles, they happen quickly. They dip, then they come up really quickly, right? Or they have in the last couple of years. So if we plan for that accordingly, and if you're a loan officer and you plan for that for your clients, it's going to give you opportunity. So some markets are slowing hard. Others are still seeing strong activity. Parts of the Bay Area are still incredibly supply constrained, while areas in Texas and Florida have seen much softer pricing and more inventory buildup. So if you're watching headlines trying to figure out whether the market is good or bad, it is honestly the wrong question. The better question is, does buying make sense for your life, your budget, where you are right now? That's really the real conversation. If you're buying, selling, refinancing, investing, or just trying to understand what's actually happening in this market, feel free to reach out. I'm Mike. I'm always around. Promise to do more of these. Feel free to reach out. I'm here if you need me. Have a great day.